welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade today. We'll also get you expert voices as to which are the points and the sectors, the stocks that you should focus on, where is the opportunity to make more returns going forward from here. But first up, a quick check on how the markets are moving at this point as we inch closer to the last half an hour of trade. Well, the markets have slipped into the red, slightly down about 25 points odd for the Nifty right now, 18,293. So it's below the 18,300 mark right now. The Sensex also below that 62,000 mark that we had touched in on intraday basis, 32 points of a decline. Mostly the markets are flat with a negative bias, but there is no trigger that's been able to take off the markets from this tight range right from the morning trade until now as we speak. Now, when we talk about the broader markets, they're doing slightly better than the benchmarks in terms of the other sectoral indices. The Nifty Bank still holding up in trade, and some of the other sectors are too looking good when we talk about gains coming in on the auto pack, on the financial services, on the FMCG space as well. The IT stocks have now, however, slipped into the red. They were hovering higher in the morning trade. Metals and pharma, these are the pain points in the markets today. Apart from this, realty stocks still up in trade. Private banks and PSU banks still holding up as well. Time now to welcome our guest on the show. Anu Jain joins in. She's a president at 361. Welcome, Anu, and thank you so much for taking the time out for this discussion. Well, how are you looking at the equity markets right now? We've been seeing a smart rebound since April. Do you really see that the stability is returning to the D Street, and so is the investors' confidence, or is there still some time to go before we see all of that?
Hi, Sakshi. So thank you for having me on the show. If you look at what's happening in US right now, it's quite in contrast with what's happening here. So if you look, we had a negative flow year last year and the year before that. April was the first year where you really saw, April was the first month in which you really saw some flows come in. And in fact, the full month of April, you saw the flows were less than 10,000 crores. And again, last 3 days, if you were to see, you got close to about 5,700 crores in the last 3 days. The flows are indicative of the fact that the FI interest is back into the market against whatever weakness is coming in the US market. And that's why you're seeing the divergence, because we held through the entire year with the other markets hitting much lower and the FI flows going off because of our domestic inflows. But now the domestic flows are stable, but it's the FI flows which can carry the market higher. And so it's a question of flows. I think in terms of results, the result season till now has been as per expectation, with banking and financials kind of leading and the other sectors slightly lagging.
Absolutely. But as an interesting contrast, the numbers that we've got today from AMFI, they suggest that the equity mutual fund inflows have declined by about 70% in the month of April to the lowest in 4 months. In fact, these investments have come in at just about 6,480 odd crore rupees in April. What could have been the key reasons for this kind of a decline that we are witnessing? Is there something that the mutual fund investors are looking at which the other small retail investors, direct investors are not looking at in the markets right now?
Well, it's actually the fact is that there is some kind of tiredness happening. If you look at what the returns are year on year on most mutual funds, or for that matter, even the index, very flattish returns. So clients haven't made money, be it debt or equity, in the last 1 year. So some kind of fatigue does set in, and that impacts your SIPs, that impacts direct flows. It does impact. Though usually this is the time when fatigue kind of sets in, that's the last 1 or 2 quarters before the market takes up. But I would suggest it's more for that. And with the global macros being what they are, people may be thinking that, we also have that sell in May and come back later. People would be waiting to see that if they get that 4-5% drop because of the US banking issues, and probably that would be a great point to come back again. I mean, these are all my estimates. It could be different from what people think, but I think more or less that would be the broad, the fatigue setting.
Okay, understood that. You did talk about that, the earning season up till March has been like, mostly as per your expectations. But after the earnings, are there any particular sectors where you have turned incrementally bullish on, and anywhere where you are now looking at an underperformance to continue?
So, well, if you look at banking, we were positive, and there was a lot of talk of margins and NIMs coming down. They have kind of stayed stable, and most of them will maintain margins. So we are incrementally bullish on some of the stocks from the same sector that we were really bullish about. Obviously, order flows and being a pre-election year, you obviously become positive on infra and construction areas. So we say pretty constructive on the that part of infra. In terms of negatives, I don't think so, but our house view is essentially that most of the auto answers where there was a margin of, I would say, tires, or for that matter, some of the products where the pricing of the raw materials came down, most of that margin expansion is into the price. Not to say that we are saying that it's a sell, but I think it's a point where you can book profits and move to some other sectors. It's just a question of the sector rotation. So I think the most constructive sectors that we are right now is financials and the infra related stocks.
Okay, got that. What about these segments like small caps and mid caps? Are you seeing a trend reversal here as well? At least in the Amphi data, what we found is that there were the highest investments in small caps, followed by mid caps, and large cap funds in fact received the lowest inflows this time around. Is there a change happening there?
So, in fact, we also come up with a research report just 3 days back where we pointed to the FII's flow also going to the same side, where FII flows have moved from large caps to mid caps and small caps. So, yes, that's a lead indicator to the fact that these sectors, I mean, when Nifty and Bank Nifty outperforms, it would be probably the mid cap and the small cap section of the market, which would probably take the lead. It's pretty visible now. They have underperformed for about 2 years. I think that goes without saying. A good way to play that would be through the mutual funds, or even if you take the ETFs which are on those sites. So, completely agree with you on that. I think they make a compelling case as and when the market kind of starts performing.
Okay. I'll take your views on some of the stocks that are buzzing. Of course, from the earnings, we've seen Asian Paints, the poster boy of the paint industry, report its earnings. Net profit has risen 45% to 1234 crores. Revenues are up by 11% as well. The board has recommended a final dividend of 21.25. Asian Paints, do you have it in your coverage as well? And after the earnings, what do you make of?
So as a sector, we've not been too positive on companies which are high multiple, where there has been more competition. So the paint industry as such, with Pidilite announcing, with Grasim announcing that they're kind of making, entry into the market, it's going to be a fairly competitive one. But having said that, the result was breathtaking for sure. Far, over expectations, which were there both on margin and on revenue. So I think the stock is reacting to the underexposure to the stock and to the sector, and it's about 3.6% up as we are talking. I think can do a couple of percentage more, but it's not that I would say this is a trading buy right now. I wouldn't be a long-term buyer into something which is high multiple and where there are going to be headwinds of very high competition coming in. So very good company, but a good business doesn't mean that it could be a good stock at the moment to buy.
Absolutely. What about Reliance Industries, another the largest stock listed on the exchanges? That's been up and about. In fact, we've seen a smart recovery from the 52-week lows, about 14, 15 odd percent already. 2,500 is around where the stock is really hovering at. There are reports that are coming in which are bullish on further upside. A lot of legs that the company is looking at as a value add going forward from here. The demerger of Geo Financials, for example, and then later on the offloading of the telecom business as well. But your own sense on Reliance Industries, how would you really look at in the current levels? There's also reports today suggesting that RIL may be a potential buyer into MG Motors India business, and that would be another foray if it all happens in the auto space for Reliance Industries. How should investors be really looking at all these developments and then therefore place their bets on RIL?
So it's one of the largest weight holders in the Nifty. So obviously a move does impact. Uh, Three verticals, four verticals, which are very important and growing: your telecom, your retail, petrochemical energy. I think as for a 5 year to 6 year view, a very good company to hold. However, if you look at the capex cycle that it is into, that is going to be going up for this year, whether it is in 5G, whether it's on the retail side, whether into green energy. So, whenever there is a capex cycle, obviously it kind of hurts the growth. But yes, combined with that, you're getting a demerger into the company. So that may offset that. You may have in the next quarter itself, quarter and a half, the financial services. So I think the near-term trigger is not going to be driven as much as by business as it's going to be done, by these M&A activities as well as the demerger. So whichever business gets demerged, the valuation kind of gives that kicker. So X the demerger, I would say I would be neutral on the company in the short term, but in the long term, definitely positive. But the demergers can actually, when are they happening, how are they happening, would determine whether what value unlocking the investor gets. So it's a long term definite hold. In the short term, as I said, the capex cycle and the demergers could cross each other out, and it could give you a nominal growth.
Got that. Another pocket that I wanted your view on is the new age tech stocks. We have discussed this in the past as well. We've recently seen Paytm reacting to the numbers. We're still awaiting Zomato, Nykaa as well. And how do they really come out with the numbers? But post the numbers, Paytm did react on the positive side. The numbers had, surprised many and, actually gave in a positive commentary as well. But your own thoughts on has anything changed for you from the time we've been seeing positive results or some indications moving in the right direction for these companies?
See, most of them have changed their focus from being, just growing to being, EBITDA positive now. Whichever one of them can turn EBITDA positive, and that's been there in the, calls which most of them have had post their results, that the focus is going to be on breaking even and being positive, because that is the basic factor whenever the next downturn comes. As such, I think whichever business can last out without any further, money raise over the next 6 quarters and can turn positive on the EBITDA with a business moat, I think will do very well. As we've seen yesterday with Zomato, also ONDM has been coming around the corner. So from a duopoly, it will become a far more competitive place. One has to see what is the pricing and what is the systems that come in to know how it impacts that industry. But more or less, most of the fintech and most of the other online sellers are going to get more competition over the next 3 years. So, would be cautious in terms of both. Some of them have come down more than 50% from the top price. So, obviously, as I said, good businesses may not be good stocks, and sometimes just the valuations may give you a play which may not be the business doing well. So, I think you may have some of these just come back because of the sheer amount with which they have fallen. They may be transitory plays for 1 or 2 quarters, and then one would have to evaluate how that particular business is doing. So you cannot, in a sweeping move, say everything is a buy or everything is a sell. But some of them are making efforts to kind of bring profit onto the table, and I think that could be the game changer.
Got that. Well, thank you so much, Anu, for being with us on the show and discussing all these various sectors and stocks, the way investors should be adopting their strategy to all of these as well. Meanwhile, markets are still slipping away into the red zone, about 18 odd points lower for the Nifty right now, 18,298 as the current level. The Sensex hovering just below the flat line at 61,914. So the markets look to be again pausing after that yesterday's move that we had seen in the markets. So volatility perhaps looking to continue as well. But we'll track every moment in the markets. You stay tuned with us onto Business Today TV to catch all the updates from the world of business and stock markets too. Until then, thanks for tuning in.